Hey, good morning, everybody. Good morning and welcome. How are you guys doing today? Quick mic check. Everybody good? Hey, Ron, good to see you. Man, it's good to be in the room. Erla, good morning. Nice to see you. Miss D, always a pleasure. Always a pleasure. Trading book, we got you on market replay. If you're here towards the end of the class, let me know, and we can go through and kind of set it up together. It's just hard to do it right in the middle of class because you got to disconnect and reconnect, stuff like that. Hey, good morning, Hamid. Good morning, Kenan, guys. Great to see you this morning. Lots going on in news today, guys. There was some 8:30 high impact unemployment claims. I'm not sure if it did anything to the market, but one of the things about news, remember that we're not trading news. This isn't Trading Places. I'm not Eddie Murphy. We're not waiting for the frozen orange juice commodities report to come out to make a trading decision. But there are people that live their lives like that. There's people that don't have patterns. They trade these news releases, and whenever there is either a medium impact or a high impact news release, it has the potential to create spikes and really an untradeable scenario. So this is one of the first advantages that I give myself every day as I come to forexfactory.com/calendar. I just put the link into the room for you. And anytime I see medium impact or high impact, my personal trading plan is that I choose to sit on the sidelines. About 3 or 4 minutes before news, I'll exit any positions that I may be in, and then until the market goes back to what I consider to be a normal flow. It's readable, I can make sure my rules are met, then I'll start trading again, guys. Like, it doesn't matter to me what the ISM manufacturing PMI, I don't care what the result is of this. It has absolutely nothing to do with me, but I won't trade into that news because there's people that may make reactions. Jonathan, cool. I'm glad you got that. Remember that you'll have to set in your ATM strategy as well. When you reload a template and stuff like that, sometimes it won't come over. So always double check that before you take a trade too. And then everything that I talk about, and guys, I mean everything that you need to be successful, I give you in the first hour. And this is a promise. This is pinky swear, Scout's honor, whatever you want to call it. Good morning, Andy. Great to see you. I don't keep secrets from you guys. I refuse to keep secrets from you guys. My goal is your success. I know that sounds like a stupid gimmick or a marketing cliche, but it's true, guys. My goal is to get you exactly where you told whoever you're working with that you want to be there. And there's an easy way to do it, and there's a tough way to do it. And there's a fast way to do it, and there's a slow way to do it. And there's a stressful way to do it, and there's a very relaxed way to do it. So I wrote this up this morning, and this is based on an email that I got yesterday. I got an email yesterday asking me, hey, Mark, is there an easy way to get into the market? And I took a little bit of offense, I'm not going to lie, because I give you guys everything that you need every day. And I wrote this up this morning, and some of you read it, some of you probably didn't, guys. But class is designed to teach you 3 rules on only 2 charts, to give you the skill set to recognize advantages and turn them into trades. Strong triggers, no termination conditions, and then a high probability entry. And class is the same for the first hour every day because all we're doing is focused on these advantages. And once you can recognize momentum, guys, this is the first rule. Once you can recognize momentum, you're capable of seeing a market that is likely to continue in the direction of the trend. This is an advantage. And on its own, momentum is a powerful enough advantage to find and take trades, smaller size, quicker profits, embracing the advantage of momentum. And then when you couple that advantage with what we call a clear path, you'll not only have a market that can push in the direction of the trend, but there'll also be no key areas in your way to create a bounce. And I wrote this in, picture a semi-truck doing 100 miles an hour down the highway. It's just hard to stop, right? It's hard to slow down that momentum. And nothing short of a brick wall is going to affect it. And guys, these 2 concepts alone, the first 2 rules for the high probability trend trade alone, are enough to create a trading plan that's consistent and profitable. I see it every day with you guys. So study momentum and study the clear path, guys. Learn them, commit to them, and once the recognition is second nature, you will find your best entry. You'll find the entry that speaks to you. You'll find the trades that excite you, guys. But until you do find your best entry, until you begin to develop your own trading plan, the high probability trend trade gives you a trade that embraces the advantages and has the potential to win 70 to 80% of the time, guys. It's a trade that helps you recognize the advantages of momentum, of a clear path through rules, and it's a trade that's going to build confidence in those advantages, guys. The high probability trend trade is not your only trade. I can't stress this enough. It is your first trade because it lays a foundation, guys. And once you learn this trade, the possibilities will seem endless. They really will. You'll be floored, flabbergasted, if you will, at what you're able to recognize. So the first hour of every classroom, guys, is designed to teach you momentum, a clear path, and how to enter with the highest probability trend trade that we teach. You're going to be given the tools to study. You're going to give pictures to create recognition. You're going to be handed a solid plan to follow until you can develop your own plan. Everything that you need to be successful, guys, I promise you, you're going to get in the first hour of class. And then the next 2 hours are where dividends are paid. The next 2 hours are where recognition and education expands, guys. The next 2 hours are devoted to your questions and your pictures. And everything in the second 2 hours is devoted to helping you read your indicators so that you can make logical decisions based on entries and the information the indicators are giving you. Dr. Crypto, I don't give up the microphone, but you're welcome to type in anything you want. I'll read it out loud and give you all the help that you need. And guys, your participation is going to foster the learning. It's important that you present your pictures with your chart read. What are you seeing on your charts? And if it needs adjusting, if there's something that I can do to help you read better, something that I can do to help you find a better entry, a smarter exit, guys, every picture that you present is the opportunity for growth. So I'm going to do my part. I'm going to give you everything that you need. And if you're serious about being successful, then I need you to do your part. I need you to participate. Hey, good morning, Richard. You're starting to play with processing trades and simulation. You have the ATM strategy selected. However, when you process a market or limit order, only the price shows. So absolutely, Richard. So what happens, and I know exactly what you're saying. Let me pull up a chart real quick and I'll show you. So that's not it. Hold on. There we go. So what you're saying is that if you put a limit order in to go short, you don't see your stops and targets, right? And you're like, oh man. So Richard, here's the deal. Until you're in that trade, until your order is filled, you don't need stops and targets. But once it's filled, both stops and targets will show up per your ATM strategy.
Order filled.
So it's okay to just have the limit order, and then once that order is filled, both your stops and targets will come into play. Yeah, no worries, man. And guys, these are the questions that you have to ask, the things that you have to bring up, because it's these little things, it's the mechanics that are going to get you to where you want to be. So that's just a little insight. Why do I teach the way I teach, guys? I've been doing this for about 4 years. I started from ground zero myself with absolutely no knowledge. And the way I set this class up, the very basic foundational approach to it, has proven to be the best of the best way to get you where you want to be the fastest. So I'm going to do my part in the first hour, guys. I'm going to talk about all the rules, what they mean, how to find them, how to study them. I'm going to give you a plan. And then we're just going to work together on making sure that you're reading your charts. And then Richard, one thing too, I want to put this in the room. For NinjaTrader, as you guys are getting used to NinjaTrader, coming in at something brand new to you, the software user guide is like all your NinjaTrader how-to. Whether it is opening, closing, market replay, rolling contracts, all that good stuff is for you here, right here. But of course, if you don't see what you need, just raise your hand in class, and I'm more than happy to stop what I'm doing and make sure that you're in a good spot. So Kind of a really important page. And then everything that I talk about is in the trading guide. I mean, 100%. Every rule that I discuss, whether it is momentum, whether it is a clear path, whether it is the entry area, all of it's available to you right here, guys. But we're going to focus first on that high probability trend trade. We're going to lay a foundation together. Because a high probability trend trade is defined as when each indicator on every chart agrees with the rules for the trade, guys. This is when triggers are their strongest. This is when there's no termination conditions present. And there's going to be no trouble spots between your entry and your target. This is our foundational trade. This is the first trade. And we're taking this first trade, this high probability trade, because this is a trade that typically wins 70 to 80% of the time when you execute it correctly. This is a trade that creates confidence through the memory of success. This is the trade that teaches you to read your indicators. It gives you everything you need to build a solid plan that suits your needs. And what you will find, and I think this is what bums people out, is that 90% of your day is going to be spent doing nothing. 90% of your day is going to be waiting for advantages. 90% of your day will not be spent in a trade. 10% of your day will be spent in a trade because the advantages are present, guys. And this is a recipe that has been providing success for people for as long as I've been talking to day traders. The people who look for one thing, that look for the best thing, that insist on their rules being met, these are the people that are having success. The people that typically feel like they need all the trades, that they need to be in every move. Typically, when you're looking for everything, the one thing that seems easiest to find are all of the losers, because you begin to forfeit advantages. So we're going to start speaking to ourselves in terms of advantages. We're going to keep it very, very focused in the first hour. And then, guys, the second 2 hours, absolutely nothing is off limits. If you're working with a different time frame, if you're working with a different style chart, if you're looking for a different style trade, the only thing I need you to do is post in the room and tell me what you're seeing and why you're doing it. And guys, I promise you, I will be able to help you do it better. Unless you're already doing it perfect, in which case we're going to high five. So I'm going to go to my slideshow here. And the path to getting to where you want to be, guys, post in the room, right? Post in the room. Everything you see, every question that you have. If you have a question on being able to see your P&L like Jonathan had, post it in the room. If you can't get your market replay to work, post it in the room. If you're curious about momentum, post it in the room. Get in the habit right now, day one, of posting, because the people that post the most, honest to goodness, get to where they want to be the fastest. The second thing is use the spreadsheet that Nexgen gave you. John just updated it on our site, but he updated it from my most current copy, guys. And I give you this in the room every day. Because we typically update it in class when you guys do great things, or maybe we talk about a concept and take some pictures. But the first tab of your spreadsheet is your trade journal. Every time you pull the trigger. So Richard, as you start simulating, I want you to build this trade journal on the first tab. And there's the directions on how to post your pictures in. And there's even a picture on how to annotate your charts to get good fast. And fill this thing up, but don't just fill it up, guys. Pictures are a big part of what we do, but they're absolutely useless if you don't come back and study them, which is why annotation is so key. You want to know what you were looking at and why you did what you did. The second tab, one of the most ignored tabs on the spreadsheet, this is going to turn you into a chart reader, guys. All this is, in green, is the rules of the high probability trend trade being met. In red, it's the rules not being met. And I'm going to give you a Word document that is going to teach you to fill out this section, and it's going to create recognition through repetition to get you to the point to where you understand momentum in a clear path and you never miss it because you've taken pictures and you've talked about it. The favorite looks is as you go through the high probability trend trade initially, you're going to take pictures and put them in here of high probability trend trades, just creating recognition again through the repetition of taking pictures and annotating. And then as you begin to embrace momentum in that clear path and you start to see more opportunities, guys, this is where you're going to develop your trading plan. You're going to start taking pictures of your best trade, your favorite trade, your rules for entry. And that's going to branch out into management and patterns that you see all the time, and even termination conditions. And there's a whole section dedicated to those because that really is the most broken rule. So what we're going to do in the first hour is we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. Guys, simulate, practice, get in there, just mess it up. It's okay. One of the biggest challenges that new users put on themselves is the expectation of greatness straight out of the gates, guys. You're brand new. You're a freshman in high school, or even more, you're a kindergartner, right? You've got to learn a little bit of terminology, and you've got to learn some looks, and then you got to learn how to piece them together. Don't put the unnecessary pressure on yourself to be perfect in the first 30 days. Put the pressure on yourself to stay focused on the advantages. Simulate, practice, and the goal is that you're practicing the correct rules. And we get to that point. Hey, good morning, Adriana. It's wonderful to see you as well. Don't practice the wrong rules. We all get tempted to try to become simulator millionaires, right? I know the rules aren't met, but if I jump in, I can make $1 million simulated dollars on 1,000 contracts. And guys, that's just an ego pump. It has nothing to do with your long-term success. In fact, it typically sets you up for a little long-term failure because luck always seems to run out when we go live. We're going to simplify heavily. Really, we're just going to talk about the high probability trend trade initially. And I want you guys to believe in your heart of hearts that when you understand the three very basic concepts of the high probability trend trade, you will be floored at the other patterns that you see. You will be amazed at the opportunities that present themselves. But you've got to learn the looks so that they become easy. And guys, that's the final tab here. Over 350 pictures of people embracing the advantages. There is the entry sequence for both long and short trades in the high probability trend trade. There's management ideas. First, very mechanical, and then when to begin holding for bigger moves. There's patterns that repeat themselves. And guys, I've started filling out the termination conditions section. Those are those areas that are likely to stop the market. And we're going to do all this, guys. You're going to create recognition. I encourage new users, take 15 to 20 pictures a day. If you take 15 to 20 pictures a day, if you annotate those charts with what you see, and then most importantly, you drop them in the room to make sure that your chart reading is correct, guys, there's no doubt in my mind, anybody on God's green earth can do this. You've just got to do it the right way. Stay focused and keep it simple. And in that spirit of simplicity, guys, we're only going to talk about 3 rules. And these 3 rules, each rule gives an advantage. The first rule, strong triggers, will give you the advantage of momentum, guys. And you're going to be able to recognize a market where the odds are favorable for it to continue in the direction of the trend. And that odds favorable momentum, that momentum is the first advantage. Your second rule is going to make sure that there's nothing in the way, no termination conditions, no areas likely to stop the market. This is going to make sure that you have room to your profit targets. I may have to liberate the squeaky toy. And we're going to call that a clear path. So when you have momentum and you have a clear path, the sky is the limit, guys. When you have momentum and a clear path, all you're going to do is you're going to find an entry. That's it. And your entry, I'm not tying you to this high probability trend trade entry, but what I'm doing is I'm teaching you how to get into the market, how to pinpoint with precision, to reduce risk, to maximize your profit potential, and to give you a trade that's capable of winning 70 to 80% of the time. And that confidence that it builds, you're going to learn to trust momentum. You're going to learn to seek out that clear path. And then, guys, your entry area is going to change and it's going to grow with you. And you'll find more and more opportunities outside of this very basic recipe. These 3 rules happen on only 2 charts. And I know that I have some people trying to work some extra charts in. And if you're doing that, I want you to do this. And Adriana, this is based on a conversation we had. Is let your rules be met on 2 charts, guys. And then as you begin to add in that range chart, and a lot of you will, and I'm a big fan of the range charts, let it confirm that the trade is met. So if you're looking for momentum, let your range chart confirm the momentum. That is the best way to incorporate it into your trading plan, is first just insist on momentum on that range chart. And what you'll find is it's just one more advantage. So that's your goal, Adriana, for a couple days, is just look for momentum on the range chart, but make sure that the rules are met on the first two, guys. Your large chart, the first chart that you'll ever look at is one bar. It's the most current bar, and it's going to define the direction of the market. It's going to let you know whether the market is going up or down. Green is up, red is down. How simple is that? It's going to define the momentum through rule number 1. It's going to let you know if that market is likely to continue in the direction of the trend. And it's going to define the key areas. It's going to define those Fibonacci areas that can be problematic, guys. 66% of your advantages, 2/3 of your advantages are happening on this large chart, this slow chart, in one bar on the large chart. And once rules 1 and 2 are met, once you have momentum and a clear path, we're going to turn our attention to a smaller, faster chart, guys, and we're going to refine that broad stroke of a brush. In this one bar, when the rules are met, you're going to see these tails, and these tails are nothing more than a little shove on the small chart. And you're going to be able to pinpoint exactly where the market is most likely to continue. You're going to have the least amount of risk. You're going to have the highest profit potential. And you're literally going to be able to pinpoint where these tails are likely to happen. And that's through rule number 3 for the high probability trend trade, guys. It's designed to get you into the market where the market is most likely to continue. And we use these two charts because the large chart is the large crowd. These are the men and women that have so much money that they can decide what direction they want the market to go and then make it happen. These are the same people that are creating the momentum that we look for, that first advantage. And these are the people that are reacting to those key areas on the large chart. And what they're doing is they're making decisions at these key areas. And if we just follow the large chart, guys, it's like that lazy river. Go with the flow. Do what the people in charge are doing. And then every now and then there's going to be this small crowd. And guys, they're still way bigger than we are. And they still have a lot of money. So much money that they can create what we call a pullback. 10 or 12 bars that go counter to everything that the large chart wants. And you're going to be able to pinpoint exactly where the small crowd is most likely to fail. And this becomes your entry for the highest probability trend trade. That refinement process will put you into the market where the market is most likely to continue with the direction, with the momentum established on the large chart. So we're going to keep it 2 charts and only 3 rules, and we're going to break down the rules. One of the things that I put in the room a little earlier, guys, is just kind of your roadmap. And the first thing that we're going to talk about is trigger lines, because your trigger lines are going to work together to establish momentum. There's small triggers, the solid lines. There's large triggers, the dashed lines. And we're going to work our way into areas on the large chart as well, the places where the people in charge are making decisions. I've already dropped both of these pictures in the room. And we're going to go through and we're going to talk about it. We're going to use trigger lines not only for rule number 1, but really for everything that we do. And strong trigger lines are going to give me the advantage of momentum. And strong trigger lines are a very decisive look. When my background is green and the market is going up, we're in an uptrend, I've already made the decision that I'm only looking for rules to be met for high probability trend trades long. I've made the decision that I'm only looking for momentum trades long. I've made the decision that I'm only going with the direction established by the large chart. And strong triggers means that my small triggers, the solid lines, are up and above the large triggers. And the large triggers should be widening. They should be opening up. And guys, when the smalls break above, I want you to picture scissors. Scissors have opened, and when scissors are open, they can cut. They can get work done. This open scissor look lets me know that the odds are favorable for the market to continue up. This is my strong trigger look, the separation between the small and the large. You're gonna hear, can't talk. You're gonna hear this called odds favorable momentum all day long. You're gonna see it annotated on charts, OFM. Guys, this is your first advantage. And to be honest with you, recognizing this advantage is gonna take you all of 10 minutes of study. In a downtrend, when the background is red, Smalls must be below the large must be widening. The space between the two, the open scissors, lets me know that the odds are favorable for the market to continue down. And guys, when you have odds favorable momentum up or down, you're going to use that smaller, faster chart to define your entry at Fibonacci support for a long trade or your entry at Fibonacci resistance for a short trade. Strong triggers push the market. Strong triggers can break those key areas. And strong triggers, honest to goodness, guys, are going to cover up an awful lot of the mistakes that we tend to make as new users. Momentum is such a powerful advantage. But momentum goes away when the small triggers work their way inside of the large triggers. The scissors close. The large triggers are weakened. And the phrase that you're going to hear associated with this look is anything can happen up or down. So if I have $100 left and someone says, Mark, do you want to take a trade where the odds are favorable for the market to continue? Or do you want to be in a position where anything can happen? Guys, odds favorable should be your decision every time. Commitment to rule number one. And it's not a difficult look to recognize. Let me open up. This is the S&P. When the small separate from the large, when the triggers are wide, they're open. Guys, this is odds favorable momentum. And there's even one of those tails right there. Maybe a potential entry. And notice that it breaks through key Fibonacci areas that the market is pushing down. And that odds favorable momentum, guys, this is the best of the best. This is your first advantage. So what you need to do, if you really want to get good at this, is just open up your large chart and take a picture of it. And you can look at it and you can begin to see things. Whoops, that's not the right one. Take an arrow and draw it to that separation. And guys, this is where annotation pays dividends. Smalls above the large. And guys, they're all green. The only way I can ever have odds favorable momentum is if the colors match. Say scissors open if you need to, if that helps. This is momentum. This is rule one met. And I want you to see it on that most current bar. It's the exact same look. So what you're doing is you're committing this look to memory. This is where my advantage is. And then right here, whoops, we'll pull this over this way. Draw an arrow. The smalls have returned to the large. So I'm going to say smalls inside of large. Weak triggers, no momentum. Rule one not met. And guys, I promise you, it'll take you one day by taking maybe 10 pictures, scrolling back to know the difference between strength and weakness. And now, on your first day, you are already an expert on trigger lines and momentum. So you can go through and you can take that picture and drop it into the strong triggers so you never forget what it looks like. You have two examples in only one picture. And then you can take that exact same picture and you can drop it into the spreadsheet under weak triggers, because now you've defined both in only one picture. And guys, the more pictures you take of the rules being met and not met, the quicker you're going to get to where you want to be. So is everybody cool with that first rule? Strong triggers. This is your advantage, man. This is the one that I won't do without. I love strong triggers. Strong triggers is like 32 flavors of kick-ass when you're looking for a trade, guys. But strong triggers isn't enough. We want a clear path as well. And that's where termination conditions come in. That's where lines on a large chart can ruin your good time. So when termination conditions are false, no termination conditions present, you're going to have room to your profit targets. And if you have room to your profit targets, we're going to call it a clear path, guys. It is lines on a large chart that may behave as termination conditions. So we're going to define those lines, what they are, just so you know what you're hearing in class. But I don't want you to rank them. One line is not more important than another line. They all have the potential to stop the market. So we're going to look for divergence highs and divergence lows. And guys, these are nothing more than pivots where there was a loss of momentum. Your software does some calculations in the background. And if you see a magenta line print off a pivot from a high, or a cyan line print off a pivot from a low, then you know that momentum isn't following price. It shows a slowdown in the market. We're going to look for Red Fibonacci. Sorry guys, I am on half a painkiller. And this red line, when the market is trending up, this is a point where the market may stop, it may bounce, it may reverse completely. And then blue Fibonacci supports just the exact same thing going the other direction. When the market is trending down, this is a point where the market may stop or bounce or reverse completely. We're going to look for yellow 1-to-1s, guys. If price is trending up, these yellow 1-to-1s behave the exact same way as resistance. And if the market is trending down, they act exactly like support. And then finally, we're going to look for mid bands every now and then on that large chart, guys. But what we're going to do is each and every one of these areas are where the large crowd is making decisions. So every time I reach one of these areas, I'm thinking to myself, these guys may enter, these guys may exit, these guys might end up in a big honking fight that I don't want to be in. So the first part in recognizing a termination condition is allowing price to reach that area. If price hasn't reached the area yet, that area is a target if you're in a position. But once those dynamic Renko bars reach resistance, whether it's a red line, a magenta line, or those yellow 1-to-1s, guys, all you have to do is ask yourself, where are my triggers? And if your triggers remain below resistance, then resistance is a termination condition. You no longer have a clear path and rule number 2 isn't met. And then if price comes all the way down and it reaches Fibonacci support, all you have to ask is, where are my triggers, guys? And if your triggers remain above support, whether it's a blue line or yellow 1-to-1s or a cyan divergence low, if the triggers remain above, rule number 2 is not met. No trades into that area. I don't have a clear path. Guys, this is the most basic way to recognize termination conditions. If price reaches Fibonacci or resistance and the triggers remain below, don't go long, and it just saved your bacon. And if it reaches support and the triggers remain above, don't go short. Bacon saved again. We see it at Fibonacci support, we see it at resistance. And guys, if you scroll back, you're going to start to develop some trust. And this is one of those things. Areas break, but when it reaches it and the triggers remain above or below, it is more likely to hold. And guys, we trade in terms of advantages. We trade in terms of patterns that repeat themselves. So when price reaches Fibonacci support and all the triggers remain above, don't go short. And look at the bounce, guys. It just saved your bacon. And if price reaches a mid-band and your large triggers, whoops, get back over here, and your large triggers remain a full bar away, which means they're below this reversal bar marker, even with the small triggers up, even with the green background, this mid-band is a termination condition, and price is likely to close the gap back to those large triggers. This is when the mid-band is a termination. So guys, recognizing where the market is likely to stop keeps you from taking trades into these areas. It keeps you from hoping that these lines break, and it keeps you, frankly, out of the decision-making process that the large crowd is probably going to make. So when is the path clear? When both the small triggers and the large triggers get south of support. Your path is clear until they reach the next area. When both the small triggers, both lines of the small and both lines of the large, get above resistance, it behaves as support, and your path is clear until the next area is reached, guys. Sometimes your clear path is 50 points and sometimes it's 2 points. But if you go through this process every time price reaches support, in the moment, it's a termination. When both the small and the large get below, the path is clear, we're looking for momentum, and we're looking for a pullback. You don't have a fib till 55.60. You're debating changing your computer time. It's not that they're better, Morgan. And this is the thing. You don't remember it because you're caught in the moment right now looking for a trade. But there's times when your Pacific time zone has worked out to your advantage. And what you just did is you displayed the trader mentality. I need to change something every time so that I have the best deal. You just have to be consistent. So Morgan, you can change to Eastern, and what that does for you is it puts you on the same clock as Nexgen server, which means that you and I are probably going to line up. So in the beginning, as you're learning stuff, guys, I think that that's an advantage. But the reality is your software doesn't know if this is a Pacific time zone or an Eastern time zone or a Central time zone fib. The only thing it knows is that if price reaches your fib and the triggers remain below, it's a term. If both your small and large get through the area is broken. It doesn't matter. Your software runs thousands upon thousands of calculations to create these fibs. They're good in every time zone, but they may be different. And you're absolutely right. The grass is typically greener over the septic tank. So guys, let it be pretty cut and dry as a brand new user. If price reaches an area, pump the brakes. If the small and the large get through, the area is broken. And it really can be that simple in the beginning. And if you insist on the momentum and you insist on the clear path, what you're doing is you're creating this recognition. And it's going to open the door for you to recognize when areas have the potential to break. This is a look when the small triggers smash, all caps, smash through an area. But the large triggers haven't cleared it yet. The large triggers are lagging behind. Guys, 50% of your triggers clear the area, 50% do not. This is why we call it a 50-50 look. And there are opportunities to trade with the potential to break. There's opportunities for longs with the potential to break. There's opportunities for short. But until small and large get past the area is not broken. Rule number 2 is not met. A clear path is not obtained. So this will never be a high probability trend trade look. This puts you into what we call a medium probability. And if you start speaking to yourselves in terms of advantages, well then you'll have to say, my path isn't clear. I'm going to rely on the other 2 advantages to take this trade. And I'm going to give you a plan for it. But in the beginning, it's either a termination condition or a clear path. Let it be simple. Hey, good morning, Zorro. Your ability to recognize momentum and your ability to recognize termination conditions will open the door for you to capitalize on the potential to break. This will be the second trade that you take. And guys, there's conditions that need to be met to make this look more effective. And it's a strong top or bottom. And you're going to hear this all day long. Did you have a strong top or bottom going into that 50-50 trade? Was there a strong top or bottom? And all it means, guys, is, well, first of all, you've got to be able to recognize termination conditions. Every strong top or bottom is a termination condition first. You have to have a termination condition first. And absolutely none of your triggers can get through the line that's behaving as a termination. Absolutely none of the triggers can break through the line behaving as a termination. So once I have this look, guys, it tells me no more long trades, no more short trades. If that termination condition reverses the direction of those large triggers, if they pinch and roll from a high, pinch and roll from a low, now we're going to call it a strong top. Now we're going to call it a strong bottom. And guys, a strong top or bottom is the precursor to the highest probability trend trade you can take. The strong top or bottom is the precursor for having a better chance at those areas breaking right after that strong top or bottom. Because what a strong top or bottom means is that even though the buyers were in control, they were pushing the market, absolutely nothing could stop them. When they reached that key area, the decisions made were so impactful. The buyers jumped ship, they took their profits, and the sellers took over, they reversed the market, and they created odds favorable momentum, guys. This is huge, and from a strong top or bottom, the market's more likely to continue in the opposite direction. So we look for these strong tops and bottoms to create advantages. Is everybody good with me on this? Lines on the large chart are where troubles can happen, guys. Lines on the large chart are where decisions are made. Lines on the large chart are going to define areas that may stop the market, that may reverse the market, that may create untradeable bounces. It's important that you understand this is a large chart scenario. This is the large chart defining areas. Once you have that, once you have momentum, if the path is clear, you're going to start looking for entries, guys. You're going to go to that small chart, that faster chart. But if you open up your small chart and you see this is the only termination condition on a small chart. This is the only time on a small chart that rule number 2 isn't met. 3 divergences in the same price range. 3 losses of momentum in the same price range. 3 magenta lines from a low, from a high. 3 cyan lines from a low. Guys, if you see 3 divergences in the same price range, it may terminate the trend. It might terminate the trend. It could terminate the trend, but it's not guaranteed to terminate the trend. Sometimes it just creates an untradeable bounce, as termination conditions do. But 3 from a low and 3 from a high says absolutely no more shorts or longs. Pump the brakes. Something's changing. This faster chart is telling you, it's showing you the change that you can't see on that big slow chart. It becomes more powerful if you paid attention to rule number 1 in momentum and you see those anything can happen triggers. You see those smalls inside of the large, guys. Now you're seeing momentum being lost through divergence, and you're also seeing momentum being lost through weak triggers. And it becomes more powerful still when that final pivot with a loss of momentum, price couldn't even match the previous. It's higher than the previous or lower than the previous from a high. It creates a head and shoulders pattern. There's strength in that. So 3 losses of momentum, guys. It just says, hey, if you're in the perfect short trade, maybe it's time to jump ship. If you're not in the trade yet, don't do it. You've lost your advantage. So those are termination conditions, guys. That's rule number 2. And rule number 2, you'll be floored at how often it keeps you safe. You'll be floored at how many trades it keeps you out of that would have otherwise failed, guys. 90% of your day is spent reading charts. 10% is spent trading. Rule number 2 is going to help define markets that are consolidating. You're going to be able to see that consolidation through rule number 2 not being met multiple times. We had a great example in crude oil this morning. I dropped it in the room for Paul. Rule number 2 isn't met over the course of nearly 7 hours in this consolidating market, guys. And it's defining the range that the buyers and sellers are duking it out in. And really, this is keeping you out of their fight. It's keeping you out of their decision-making process. So without momentum, I'm not looking for a clear path. I choose not to trade. But once I have momentum, if I don't have a clear path, I still choose not to trade. But once I have momentum and a clear path, I'm committed to finding that entry on the smaller, faster chart, guys. And the difference between the traders that are successful and unsuccessful, in my experience, this is not a gospel truth thing. The difference between the people that find success regularly and the difference between those people and the people that are taking losers are the people that are learning how to do absolutely nothing when there's nothing to do. The people that are committed to waiting for the rules to be met. And I see it every day. And guys, I'm giving you the keys to the kingdom this morning. All you have to do is learn to be patient. And as you develop that patience through the high probability trend trade, you're going to start to see more patterns. You're going to see more opportunities. You're not bound to this trade for the rest of your life, but this trade is creating the most beautiful platform you could ever build to be able to recognize advantages. So when I have strong triggers and that advantage of momentum is present, then and only then will I look for that clear path as a new user. And if the path is clear, well, then I'm going to go to that smaller, faster chart, and I'm going to define the point where the market is most likely to continue, guys. And I'm going to define it with such precision that I'm going to use a limit order. I'm going to wait for the market to come to me. And I'm going to have that limit order waiting in an area inside of favorable large triggers. So if one day rules are not met, no trades, it's normal, right? And it is. In trading book, it is so rare to make it a whole day without a trade. I think I've only done it maybe once in 4 years. And what happens is the people that aren't finding trades initially don't have a clear grasp on the rules yet. And they're just not in a position yet where this is so second nature that they don't miss the rules-based trades. And what you'll find is through a little bit of study and a little bit of patience, those days that didn't have trades turn into days that maybe had 7 or 8 trades. And it's part of that growth process. So yeah, if you go all day without your rules met, that's where you have to scroll back, right? That's where you do that market replay trading and you pause when you think the rules are met and you make sure and you fix your mistakes and you take the trades that you missed. And you're asking if one of your instruments don't have the rules met, should you jump between instruments to catch opportunities? I've got 2 thoughts on that, and they're my opinions, and we all know what opinions are like. And I don't give trading advice ever, but here's what I think is trading book. If you're good with the patterns, right? If you know what it looks like to have momentum and a clear path, and you're insisting on it, I don't think there's much harm in swapping in between the two if you have that commitment. But the flip side is that if I'm watching the S&P, right, and my rules aren't met, so I go focus my attention on crude oil and the rules aren't met, and I go back to the S&P and I just missed a trade. And I missed a trade because I was looking at a different market. Am I more likely to fabricate a trade to make up for that miss? Am I more likely to break my rules to make up for that trade that I feel like I missed? And I know that in my own personal life, I was. If I missed the perfect trade because I was looking someplace else, I feel this desire to make up for that trade that I missed. So, I mean, do it. And if you find yourself in that position, stop doing it, right? That's what simulators for. Yeah, what we're doing is we're just developing. But the cool thing is, Trading Book, is you can go back and market replay one market at a time. And over the course of 3 or 4 hours, you can replay an entire day on 3 or 4 markets and find those advantages and the ones that speak to you. So do what suits you. Do what suits you in the beginning. And I'm telling you, the more time you spend and the easier it becomes because of recognition, the easier it is to begin to add markets, the easier it is to begin to add trades. But build the foundation first. So once the rules are met, good question, we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Guys, this is the rule. This is the language, and we're doing that on the small chart because we're relying on that small crowd to fight. We're relying on that small crowd to push, guys. And we do this, and this is the refinement process shown. 1 bar on the large chart is going to define your momentum, your direction, your path. And then once the rules are met, you're going to find that you're way down at the bottom of this bar. And you're going to get this fear of missing out, and you're going to wish that you were in a trade, but you're not yet. And guys, this is where the small crowd tends to fight. And they tend to fight in the middle, in between areas. So you're going to be able to take this fight from the bottom of this bar. This is the beginning of the fight. And the top of this bar, that tail, is a pullback to resistance inside of triggers. This is your defined entry, where the small crowd is most likely to fail. And then as it pushes down in the direction of the trade, before you ever get out of that 1 bar, you've probably already taken profits and have locked that in. And it's that refinement process that allows us to reduce risk. And it's that x-ray of that 1 bar that allows us to maximize profit potential, guys. So you're going to hear inside of favorable large triggers about 1,000 times a day. Inside of large triggers, inside of triggers. And one thing that is true, gospel truth, is that price loves to come back to the large triggers, guys. Price loves to pull back and hit those large triggers, whether it's a large chart or a small chart. It happens all day long. So we're going to call the large triggers on the large chart the correction point, where we expect price to return. And we're going to call the large triggers on the small chart the correction point, where we expect price to return. And to make life easy on us, we've taken the large chart correction point and the small chart correction point, and they're both on the small chart. You have large triggers, the smooth triggers, and synthetic triggers, the stepped triggers. And all these are the large triggers from the large chart, guys. So when your correction points are overlapping, when two correction points come together to form one, like two snakes riding piggyback, this is going to give you the most accuracy. This is going to give you the least amount of risk. This is going to give you the smallest possible area to shoehorn fibs, mid-bands, or yellow one-to-ones to give the market something to bounce off of. We expect price to return to the large triggers. We expect it to bounce off of areas inside of those triggers. So the tighter they are, the smaller the area is to have those bounce points. So we're going to define the window of opportunity, the point where the market is most likely to continue. You already have momentum on the large chart. You already have a clear path on the large chart. So now you're going to wait for the small crowd to do their thing, guys. That's the reversal bar. After all of these green bars up, that first red bar is what we call a reversal bar. And all it is signaling the beginning of the fight, the beginning of the push. And the reversal bar is not your entry. And once you get the reversal bar, you're going to identify your favorable large triggers. That's the red box, from the highest line to the lowest line. And it's inside of this red box, inside of those trigger lines, that we're going to look for areas. Fibs, mid-bands, yellow one-to-ones, not pink one-to-ones, Andy. That's such a good question yesterday. Fibs, mid-bands, yellow one-to-ones. And these are where I expect price to bounce. I expect it to return to the triggers, but the triggers aren't my entry. The areas inside, all caps of favorable large triggers, is the point where the market is most likely to continue. So guys, if there's a high point and a low point in there, it's going to create a window. It's not one tick. It may be 10 ticks. But this blue shaded area is where the market is most likely to continue. And because of the odds favorable momentum on the large chart, because there's nothing in the way on the large chart, you guys are going to activate. You're going to right click on your small chart and activate a limit order just above that highest point of support. And if the small crowd has it in them to push back to your entry, you're going to be in the highest probability trend trade. You have entered where the market is most likely to continue. Areas inside of favorable large triggers. And while you're in right here, even if it comes all the way down to one-to-ones, you're going to learn not to panic, because it's still in the window. But you'll notice that this blue Fibonacci support is not inside of triggers. This is outside of the window, outside of the correction point. We don't expect the market to come here. So our entries are taken at the absolute highest point. And for a short trade, it's the exact same thing. When the large chart says down, when the large chart has momentum, when the large chart has absolutely nothing in the way, you're going to wait for the reversal bar, but the reversal bar is not your entry. It's going to have you looking for favorable large triggers. And if price hits those triggers, that's not your entry. We need something for the market to bounce off of. In this case, there is one line inside of favorable large triggers. There is a mid-band. And you're going to activate a limit order about 2 ticks below that mid-band. And you're going to say to yourself, if the small crowd can push up to this entry point, I'll be in the highest probability trend trade ever. I'll be in the best of the best. I've defined where the market is most likely to continue. All of these areas beyond the correction point are not a part of the equation. We don't expect the market to make it up there. If it doesn't bounce, guys, that's just not our trade. But this is your entry for the absolute highest probability trend trade. And the cool thing is that if you take 20 days, and 20 days feels like forever when you're brand new because you want to be a trader. Be a chart reader first. Learn to identify momentum. Learn to commit to a clear path, and then pinpoint exactly where the market is most likely to continue. Guys, this sets you up for your management plan. You're going to put your first protective stop where the market shouldn't go, typically 4 or 5 ticks above those trigger lines, beyond the correction point. Because if the market pushes beyond, well, you don't want to be in that trade anymore. Your advantage is gone. So it's going to be normal to get stopped out of trades. Any trade that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And you're going to become okay with that because you're going to study this entry. You're going to learn to trust this entry. You're going to believe in this entry, and you're never going to miss this entry. And you'll have the ability to put your stop where the market shouldn't go. Excuse me. More often than not, with those advantages in place, you're going to get a reversal bar in the direction of your trade. You're going to get confirmation that the market is going the direction you wanted it to go. You'll be able to reduce your risk 2 ticks above it for a short, 2 ticks below it for a long. And it's not uncommon to see Nexgen users that have gotten so confident in their entries to take the perfect entry right at support inside of favorable large triggers to get the reversal bar, to reduce their risk and only lose $30 or $40 on that trade that fails. And guys, it's small losses that allow you to get the most out of your winners. But you've got to go back and study, and this is where the tails come in. We don't trade tails. We trade pullbacks on a smaller, faster chart. But if you go back historically and you circle tails when the rules were met, you can see if they line up with areas inside of favorable large triggers. If they do, take a picture, annotate your chart, put it into that spreadsheet under your favorite looks. This is the trade that you never want to miss. And until you've committed it to memory, until it's easy, go to those client trades, guys. Over 350 pictures of 50-50 trades, of high probability trend trades. And guys, you're even going to see high probability trend trades that didn't work. And because the rules were met, because the entries were perfect, this is a great example. Every rule was met, and it resulted in a 2 or 3 tick loser after the reversal bar printed. But the setup is the same, and you've got to be willing to take a hickey every now and then because it's just a part of trading. So go back and study, develop a little faith, get in there, study that spreadsheet, and you'll begin to see the correlation between momentum, clear path, and entry area, whether the market is going up or down. You will be capable of capitalizing, of taking profits, of taking trades that win more than they lose. And that is my first hour, guys, on the rules. Are there any questions about the high probability trend trade? Are there any questions about identifying momentum, clear path, or an entry? What I'm going to give you right now is going to absolutely magnify your ability to learn these concepts quickly, guys. And it's Chart Reading 101. And this is designed to turn you into a chart reader, to recognize these advantages. And I'm going to tell you right now that I would say 95% of this classroom hasn't done this because it feels like work. And for whatever reason, we get it in our brains that making $1 million a year shouldn't require any work, which is ludicrous. Guys, if you take 25 pictures each of strong triggers, of weak triggers, of a clear path of termination conditions, of a 50-50 look, of those entries, you're never going to miss them. That recognition is going to slow the market down for you. That recognition is going to make it so you know exactly what you're looking for, exactly what has to happen for you to enter the market. But don't just take pictures, guys. Annotate. Put the whys. Why is it strong triggers? Why is it weak triggers? Why is it a termination condition? And I've never had anybody go through this drill, even partially, and tell me that it wasn't incredibly beneficial to them. And I don't know why we fight it. Why do you guys fight it? Why won't you do it? Because it's not trading, right? Because it's not exciting to go back historically and look at these advantages. But if you do go back historically, you start to respect these advantages. You start to respect these ideas. You learn to trust these ideas. And you begin to recognize patterns. So I'm going to give you guys that. And as you do it, I'm going to give you a great way to police yourself. So I'm going to give you a high probability trend trade checklist, guys. And I'm going to tell you right now, I've never in the history of this checklist had people follow it to the letter and do worse than 70%. Remember, we're in this to get paid. Never had anybody in the history of this checklist do worse than 70%. So print this out, put it on your desktop, and I'm going to tell you right now, one of the greatest things that you can do for recognition is commit to typing your rules on the chart. Every time you take a trade, reference momentum, clear path, and entry. Do it every time. And you'll be amazed at how quickly recognition comes. And as you're developing it, here's the same checklist with what it means to be coming from a good top or bottom. It's a termination, no triggers through that reverses the market. Here's your odds favorable and here's your weak triggers. You'll never confuse the two. No triggers through is not a clear path. Both triggers through is a clear path. And there's that 50-50 look. And then also identifying where the market is most likely to continue. Guys, there is no way to not get good at this if you go through this drill. There's no way. And there's 1,000 ways to F it up if you choose not to do the study. Trust me on this one. I watch you guys do it every day. And then finally, I'm giving you the KISS plan. The Keep It Simple Sunshine plan. Because it turns out I'm not allowed to call you stupid. You want to know why, Morgan? Let me read what Morgan said, and I'm going to tell you why. So Morgan said he's been doing pretty well for the past few months on a good learning curve, but for some reason these past few days you've really spiraled and become quite frustrated, thinking of restarting fresh and just looking for high probability trend trades again because you have tried to add too much too fast. Absolutely, Morgan. So here's what happens. And Paul, I need a link, brother. Then you may need to start fresh. You may need to reset your data, repair your data. But if F5 didn't work, the first thing I would do is right-click and reload historical and just see what that does. So, Morgan, one of the things that I did in my life before Nexgen is I ran restaurants, service industry for 30 years, guys. And I got to a point in my career where people were sending me. As we opened new restaurants all over America, they were flying these new restaurants managers to me to learn, because one thing that I was really good at is systems and routines. One thing that I was really good at is creating patterns in your daily life for success, kind of like I try to do with you guys. And there was this phenomenon, Morgan, called the 30-day stupid. And forgive me if stupid offends you. Work through that. And the 30-day stupid was when you came to me, Morgan, from Florida or the Carolinas or New York or Chicago or wherever we were opening that restaurant. I sat you down and I said, hey, Morgan, this is exactly what you need to be successful in this job. This is where you need to be, when you need to be there. And this is how you need to do this. And what happens is these people would come to me. And in their first couple of weeks, the VP, the area directors were absolutely floored at how brilliant people were when they came and trained with me. And the reason they were is that they followed the checklist that I gave them. I gave them systems and routines, and I explained the whys. This is why you need to be doing what you're doing. But right around 30 days, guys, human nature kicks in, and we all feel like we're too smart to read the checklist. I don't need the checklist anymore. I've been kicking ass for 30 days. Has anyone else other than me done that? I don't need to look at my rules anymore. I don't need to worry about my trade plan anymore because I've been successful. And what happens is the second you deviate, that success begins to waver. So at least 50% of the people that I trained went back to doing it their way instead of the right way. And guys, this is one of the dangers, not dangers, but one of the challenges that you're going to face. Morgan, you've become an astounding chart reader, right? You can open up a chart and you can literally say to yourself, this is where the market has momentum and that's where it's likely to go. And this has the potential to stop it. And Morgan, you've gotten so good at reading your charts that you're doing what most people do. They begin to trade their chart read rather than their rules. Does that make sense? Does that resonate at all? You begin trading your opinions rather than your rules. You begin trading your reads rather than your rules. And guys, I've fallen victim to it, and I think everybody in this room probably has. So you're absolutely right, Morgan. When you start to deviate from your rules and embrace your reads, going back to the KISS plan is an outstanding way. It's an outstanding way to get back to solid, to get back to profitable, to get back to consistent. So whether you're brand new, focusing on consistency, or whether you're coming back trying to regain that consistency, this KISS plan is designed for you because it's designed to optimize your chances of success. And it's your chart read that will let you know that your rules are met, guys. This isn't the end. This isn't your only trade. This is your first trade. This is the trade that creates confidence. This is the trade that optimizes your chances of success. This is the trade that gives you a plan capable of winning more than it loses as you learn to read your indicators, as you develop your own plan. So through simulation, through study, through class feedback, continuous practice, guys, you're going to create your own plan. You will, I promise. So Paul, you talk out loud. You talk out loud, describing your advantages. Every time you look to take a trade, scare the dog, drive the dog crazy, drive the wife crazy. Can I ask you, Paul, is it helpful to make sure that you say these three things every time you're looking for a trade? Is it helpful to recommit to rules before you pull the trigger? Absolutely it does, guys. There's an easy way to do it and there's a hard way to do it. I promise you. So you're going to create your own plan, guys. You're going to become a chart reader. Your simple plan for consistency, and I'm going to share this because we have some new people. Your simple plan for consistency is don't fight the large chart, guys. Don't go up against the large crowd. They're going to whip your ass more often than not. And the road to financial suicide, how to commit financial suicide, one easy step. This was a tongue-in-cheek book written by my brother. Chapter 1, warning sign your friends are in trouble. They are trading against strong triggers. Chapter 2, they're trading in determination conditions. Guys, these are the two most common mistakes that our egos get us into. These are the two most common that our chart reads will have us forming opinions about. So if you commit from day one to never fight the large chart, you're already doing better than 70 to 80% of the other traders in the world. And then you've got to define your entry. That's all we're doing. 20 days of defining your entry. Don't worry about wins. Don't worry about losses. Get in at the right spot and drop that picture in the room to make sure that you're reading your indicators correctly. Because once you define your great entry, guys, great entries create manageable trades. The market's like a toddler, does the opposite of what you want it to do, pretty much. You know what the truth is, Doug? And one of the most profound things that was ever said to me is the market doesn't give a shit about your position. It doesn't care about what you want. It doesn't care what direction you want it to go. It doesn't care. It doesn't even know that you exist. You have zero influence on the market, which is why going with the flow is always easier. Once you define your entry, guys, once you can pick the spot where the market is most likely to continue, you've got to do something with it. You've got to manage it. And one of the characteristics of a mature trader is that they manage risk before they ever manage profits. And you manage risk through momentum, and you manage risk through clear path, and you manage risk through great entries. For which one? For what I'm showing right now, Trading Book, I'm about to drop them all in the room at the same time. I'm going to drop the 101 chart reading, the KISS plan, the high probability trend trade checklist. I'm going to give you my spreadsheet. I'm even going to give you the PowerPoint that I used. And I find if I drop it all at one, it's easier to find. So we've got to manage, guys. And your management plan is based on good entries initially. If you allow your management to be as mechanical as your entry in the beginning, It's going to reduce fear and worry and anxiety and nerves, and it's going to be very if-then. And then once you get some reps, once you're reading charts, you're going to change it. You're going to adjust it to your needs. But your very basic mechanical plan, if my rules are met, then I enter where the market is most likely to continue, my high probability trend trade entry. And if I enter at the best of the best spot, my stop will go where the market shouldn't. And that's it. That's all you can do. You're either going to get stopped out, and guys, I'm telling you right now, it's a very normal part of a positive equity curve to take losers. Losers are going to happen every day. But with all of those advantages present, you're more likely to get that reversal bar in the direction of the trade, that confirmation that it's doing everything that your large chart suggested that it should. And if I get a reversal bar, then I will reduce my risk 2 ticks above that reversal bar. Or if it's a long trade, 2 ticks below. And there's absolutely nothing for me to do until I either get stopped out or my first target gets hit. And for you guys that are brand new, that are developing confidence, that are learning to read charts, your first target's only $100 away from your entry, guys. And with the advantage of momentum, with a clear path, giving the market a place to bounce, guys, it's difficult to not hit that $100. That $100 creates confidence. That $100 feels good. Right on. Take care, Andy. Go enjoy your afternoon. And once you hit that $100, your palms, the sweat begins to dissipate, guys, and those butterflies in your stomach start to go away. And I'm telling you, one of the biggest things new traders avoid is getting paid. One of the most common mistakes that I see new users make is absolutely refusing to get paid. They hold on, they have this weird idea that every trade has to be $1,000 trade, guys. $100 a day, if that's the best you can do, adds $25,000 to your account at the end of the year. And the cool thing is once you get paid, you're going to go break even. And you're either going to get stopped out, break even, and it's going to be a $100 trade, or all of those advantages are going to carry you to your second target. And your second target is only $200 away from your entry. And guys, this becomes a $300 trade. This becomes a trade that had every advantage, the perfect entry, the mechanical management, and this is a trade that's worth $300. And I want to show you one more time why you don't have to make all of the money every trade. Get paid. $300 a day, guys, 252 trading days in a year typically, is $75,600 on one high probability trend trade going the distance, and probably cutting it short, to be honest with you. The idea isn't that you take all the trades. The idea is that you take the best trades, that you get paid on the trades, that you know exactly what it takes to get you in and exactly what it takes to get you out, that you have a plan that kills your emotion, guys. And then you can use those trade copiers, and most trade copiers allow 20 accounts. So that $100 on only 10 copied accounts is $1,000 on that $100 trade. And on 20, that's $500,000 a year, guys. So get really good at the basics. Get really good at recognizing the advantages. Insist on your rules being met. And what happens is when you do this, you're focused on the absolute best of the best. And then you can't help but start to see more. So what I've just put in the room, trading book, you have the PowerPoint that I used to teach every day. So you have pictures of these things. You have the chart reading 101 so that you can become familiar with the individual looks and turn them into trades. You've got the high probability trend trades so that you can check yourself on your pictures and make sure that you're following rules. And of course, I'll do it as well. You have the KISS plan, and I put my trade tracking sheet in there as well, guys. So when I say this, I don't say it lightly. You have every tool that you need to be successful. You have the world's greatest software. You now know how to study it. You have access to me for 15 hours every week to give you feedback to make sure that you're doing things right, guys. So I'm very comfortable in saying that I've done my part. I have done exactly what I promised you, and I'm also going to give you this one, why I teach the way I do. Read it if you haven't read it yet. So now it's on you. Now it's up to you to commit to following rules, to learn the looks. And here's some great things, guys. Weak triggers, deep retracement. Mid-band hit, large triggers a full bar away. It closes the gap to the large triggers. And now we're directly into a termination condition without momentum, without direction. 90% of your day is spent reading indicators. So I'm going to leave you guys with this, and I'm going to go take a break. I'm going to walk around real quick. I'm going to try and caffeinate just a little bit. I'll be back in about 5 minutes. When I come back, we're going to get into the second half of class, guys. I'm going to click on every picture that you guys have posted, and I'm going to go back to those pictures in regards to momentum, clear path, and entry. And sometimes we're going to high five, and sometimes I'm going to tell you you got lucky, but we're going to go back and we're going to learn to speak to ourselves in advantages. So, guys, I need you, want you, you have to tell me what you see on your chart. You have to tell me what your chart read is so that if it needs adjustment, we can adjust it. And I promise you, we're about to pull 1,000 lessons out of the pictures that you guys post. So watch the market, do your thing. If you get a trade, take it. I'll see you guys in about 5 minutes. right, y'all, let's get to work. Just for grins. Does anyone recognize any sort of pattern here? Just curious. Pretty cool, right? That's what we talk about every day. So guys, I'm going to scroll up to the very top of the chat box and we're going to start looking at all the things that that you guys have posted. We're going to relay them back to terminations and momentum and entries. And we're going to start with D. And this was yesterday, 138. Guys, I don't mind if you throw in yesterday's trades. I don't mind if you throw in your playback trades. I think it's pretty cool when you do that. So D's got a termination that reversed the market. That's a strong bottom. Absolutely perfect definition. And guys, I'm telling you right now, if you really want to be good at what you're doing, annotate like D annotates. Odds favorable momentum, strong triggers, smalls above the large triggers, space between like scissors. Rule number 1 is met. She has an arrow pointing to it. Not a clear path because the large triggers are down here. And then D says, check it out. I can still take an entry right at support, right at the trigger, and I'll get paid at trouble. And then I can just re-enter and get paid at trouble. And D, this is phenomenal. What a great trade. And then Paul has a strong bottom. He has odds favorable, the potential to break. The entry is perfect, and it just didn't work. And it just didn't work. But you couldn't have taken it any better. And then you've got the potential to break. And the entry isn't great, right? And then, Paul, this is where I think you might have gone a little bit outside of your rules. 50-50 trade and 2 divergences. That's typically a deal breaker on a 50-50, guys. Sometimes taking a shot with 1, it might work out. But once 2 prints, it's less likely to go. And you just got caught in a range this morning. That's all it was. But you were up early enough that you were at the beginning of the range. You didn't realize it was going to be a range. So I don't think either of these trades are crazy. I think getting in over here with 1 divergence gave a little management opportunity. But getting in with 2 divergences really made it tough for you there. Nice stuff. And guys, remember, if you have a question about someone else's chart, feel free to ask. Don't feel like you only get to ask questions on your chart. So if somebody posts something and you're curious, knock it out, ask a question. I scroll back and forth. I go between the pictures up top and then back down to the chat box. And then Paul, once again, there's that range bound. Odds favorable, 50-50 on 3 different areas. Second divergence prints, and it just doesn't work out. And then guys, I know that I ask every now and then, do me a favor, when you post in the room, if you guys can give me that screencast link, instead of just posting in the room, it's easier for me to get those pictures. So Paul, once again, caught in the range. I hope that made sense. Crude oil can't make a decision. Guys, whenever you see a range-bound market, yeah, I know, Paula, you're good. I've even got John Novak learning to do it. 50-50s, I insist on those being perfect. If it's been range-bound, 50-50 better be the absolute best of the best. And once those divergences start printing, guys, once I start giving away momentum with the clear path, especially in a range bound, they're more likely to fail, without a doubt. All right, Jeffrey Dean, we got a couple of them here. And then Jeffrey trading crude as well. Into a termination, and it looks like you lost, potential to break, and you won. And then on the pullback, you get back in. So what you need to do, Jeffrey, is right-click on your small chart, to get those back up there, right click and go to data series. And then once you go to data series, scroll all the way to the bottom and text and marker. And that'll get you back in. So let me put this picture up there for you guys. If you can't see your entries and exits, this is how you get them back. So sometimes when you put in like a new template or something, or you rebuild your work spaces, that'll get you back to where you need to be. And then going back to it. And then I got you again there. So that gets you. Jeffrey, let me know that you got that, and let me know that makes sense. Right click, data series, plot executions. We'll get you squared away. And then Paul, getting in 10 ticks away from the entry. Didn't give you any room to manage. Same thing, range bound crude oil. And I think, guys, one of the things, and I'll say it one more time, 50-50s are rough in a range bound market. And then Paul, this is nothing more. This is odds favorable. Your path is finally clear. There's no reason to not get in at the mid-band. No, I appreciate that, Jeffrey. There's no reason to get in 2.5 bars late, right? Great entries create manageable trades. This is high probability look. This is absolutely perfect entry, low risk. And then getting in at 27, you had $130 worth of potential profit. No reason to not get paid. No reason to not get to break even there. And this is where, guys, knowing what kind of trade you're getting into pays dividends. Because if you think it's something that needs confirmation, you just blew $100 on confirmation that wasn't needed. I hope that makes sense, Paul. I don't think Paul's in here. Well, I hope that made sense to the rest of you. All right, Jonathan. Long time no see. And Jonathan, we fixed that with the P&L already. Good stuff. I'm playing Ninja Trader Fix-It Guy today. And then Paul, 50-50 to the upside. You take the perfect entry, you manage out. Nicely done. Get a little bit of that money back. And then Trading Book, you say one skipped, one missed. And then Trading Book, are you comfortable putting the links in there instead of posting in? Because I just tried to open your picture and it's not letting me. Are you on Snagit or Capture? Okay, so let me help you with that. We'll do that real quick. So once you pull up Capture and you take that picture, and it's up there, to get the link instead of copy pasting, click this upload button, and this is how you're going to get pictures in your spreadsheet as well, guys. But if you click the upload button, it's going to give you that screencast link, so just copy it and paste that into the room, and then I can open it. For whatever reason, Discord isn't letting me open when you guys paste pictures in there. Awesome, thanks. So I'm going to try to open these, but it doesn't seem to be letting me open the pictures that you posted. But you know what? I'm pretty sneaky. And guys, I hear somebody texting me in Discord. I don't check those when I'm teaching. Just a heads up. So strong triggers, clear path before we reach support. This 1-to-1 dots are long on previous time. I'm not sure what that means. Can I trade this even though the 1-to-1 line is short and not touching price? Yeah, so great question. Trading book, one of the things is when they stop printing, they're done. So this has absolutely no bearing on anything going on. The same way this little partial fib is done, the same way this fib is done. So when they quit printing, they're done. So you're all good on that one. And then let me find your second one. Is that going to open? Oh, this one's going to open for me. Cool. So not a strong top, just a pivot from the middle of nowhere. Does that make sense, trading books? In order for it to be a strong top or bottom, we're going to go back to that idea that it first has to be a termination. And I know that there were 3 divergences, but we're using that large chart divergence. But you're absolutely right. It pulled right back to triggers, but you're missing your synthetic triggers. Yep, it needs to hit a line, and it just didn't. But you're missing your synthetic triggers on your small chart. You don't have those large triggers to give you both sets to create it. And it definitely pulled back to them. You nailed it. It's the perfect one. Yeah, go let Jason get you right. But you absolutely nailed it. Odds favorable, everything down, pull back to the mid band right there at the triggers. And it's just easy money, brother. So great job. Nicely done on that one. That's okay. You recognized it, right? And why did the price run down? Because someone with a lot of money wanted it to. So why did the price, where was your entry? Oh, okay. So I got you. So I'm going to show you a little trick. When you're using the mid band for entries, so your mid band, as price comes up, the mid band's a moving average. So your mid band is going to be working its way down as price comes up. So I'm typically 2 to 3 ticks below it, because by the time price gets up, that mid band's coming down. And if you're right at the mid band, then you risk missing. And that's just a little timing thing. It's like leading the passer. Like, you know, if you're throwing a football, or ducks if you're a hunter. By staying 2 or 3 ticks below that mid band, if it stops a tick or 2 short, you're still in the trade. And that's why it missed you. Just didn't quite work out. And that's okay though, because dude, your recognition is spot on. Even if you don't make the trade, even if you don't take the trade, you know exactly what you're looking for, and that's a victory. So celebrate those victories. You called it perfect. You just didn't get your fill. Which means that that particular trade was not your money. And then Paul, I see you and John talking about it, so I'm assuming that you got that squared away. Andy, everything says down, the path is clear, pull back to the mid band right inside of triggers, and easy money. So guys, if you're working on a plan, if you're working on the best of the best, Andy just gave it to you. One line inside of triggers, it's exactly where he entered, and he got out at trouble. And this is spectacular, Andy. And then Ron, odds favorable, clears the mid band, gets in, gets out. $550 in 5 seconds. Christine, steal this picture. This is the one that you've been looking for. This is the one that seems to speak to you. So make sure you steal that one. And then Andy Man, same one, and that was your day, huh? Andy Man says, that's it. I made it. Goals met. I'm going to go do something else. I'm going to go live life. What a great thing to do. You want to see the green stuff trading book? I just saw that. I like it. All right, Paul Flowers. I'm going to click on all four and let's go through them. All right. Weak bottom. Price reached an area. Both triggers busted through. 50-50 trade, right? The larger, or the smalls are through, the larger not. Late entry. One divergence, you stayed into the trade. Second divergence, you exited break even. And this is just a 50-50 that's failing. Paul Flowers, it's a great read. Had you gotten the best entry, it would have been easy to get paid. But because you are 3 points away from the best entry, it didn't give you a lot of management room. So good job not giving anything back on a 50-50 trade that's failing. Nice management. So I have to ask, Paul. Strong top. Termination condition, right? 100%. And the gap theory, the large triggers were a full bar away. Are you okay recognizing the gap theory? Cool. This said, don't try that short because you're going to have an enormous amount of risk. Let it come up and close the gap, right? And then again, if you let it close the gap, it gives you room to get back. Gives you room to get back. And you're trading directly into a termination condition. I mean directly into a termination condition. And look at the bounce it creates. And that gap theory buys you a little bit of patience on the bounce. Does that make sense? Awesome. Good job. And when they're split like this, Paul, it's not a bad idea. Let it close, and then if you get that reversal bar confirming it, it gives you room to get back to trouble. And this blue line had to be, let it be a target. Get paid. Get paid. Nicely done. And then here it's just easy, right? Everything says up. Momentum is going. Miss the good one, but you get in. And with all that momentum, it just carries. It's beautiful. Nicely done on this one, man. Way late on your entry. And then same look. Everything says up. You take the pull back to support. Stops in the right spot. And could have made a little more, but you had the profit set at targets. Great job. Great trading, Paul. I think the only one that really got you, I mean, the late entry makes it hard to manage a 50-50 and gap theory. And then the other two are just rock star. Great job, dude. Nice to see you posting in here again. All right, Josh. $50-50 trade on the divergence low. Strong top. Everything says down. You get in. Oh, and it got you, but you're like, wait a minute. This is the right trade. And you get back in as it heads down. Took the eek exit. And then the jump ship. Nice job getting it back, Josh. Sometimes they don't work. Sometimes they overrun a little bit, right? Sometimes the market has other ideas. And man, the difference between novices and pros are your ability to recover from something that wasn't good, right? And Josh, you did it. That was a great entry. Your stop made sense, maybe a little tight. You're only 2 ticks above the large triggers. I teach 4 to 5 every day. 4 to 5 would have kept you in this trade without having to double up. And then, man, when you've got that look, that fib is such a beautiful target. Let it run a little bit. Nice job, Josh. And let's see if this will open for me. It is. I love it. Strong triggers, momentum, trend trade short. Same trade Josh took. That's perfect, paper. Trading book and pencil. It's perfect. It got sucked into a little consolidation and then broke out, and you knew exactly where it was likely to happen. Beautiful, beautiful, beautiful. All right, let's see what this John Novak is doing. John says, with odds favorable momentum and a clear path, I will sell a pullback to resistance inside of triggers and get paid. Did you guys notice? Man, I really want you to take notice of this. I want you to take notice of this. John Novak, the CEO of the company, the guy that wrote the software, the guy that's been teaching day traders for 27 plus years, takes the high probability trend trade. Let that resonate for a second. For if you're like, oh, there's probably some secret shit that they don't tell us. Guys, he takes high probability trend trades because they work. I love it when he does this. I'm going to high five him later. Does he take some crazy looking stuff? Absolutely. He's got 27 years. But what you'll find is that this is such an outstanding trade, you would be silly to not take it. And if the guy that wrote the software, that created the plan, that has been teaching people forever takes that trade, doesn't it make sense that you should learn it? You guys that are trying to do the John Novak thing? Paul, everything says down, you're in, paid, money, same trade. First trade back on the KISS plan. And it paid dividends, Morgan? Are you shitting me? Pardon my French. Are you kidding me? Morgan, you said I got to get back to simple. You did, and you made money? So how many times do you have to do that until you believe it, right? How many times do you have to stray away before you go back to that girlfriend that was good to you? It doesn't have to be hard, ladies and gentlemen. It does not have to be hard. And if you're patient, you can make money. Yeah, but she'll never let you forget it. That sting will last forever, Morgan. Great trade, dude. I mean, beautiful trade. And then Paul gets in short here, exits, exits, goes short again, exits, exits. Let's just make money all the way down. Great trading, Paul. Telling you guys, trade with momentum, trade with direction. It doesn't have to be hard. The only reason trading is ever hard is because we make it hard. If you would like, you'll put the image where you had to sit up and think to yourself, dang, I need to restart image of the trade. I don't know what that means. Show me the picture. Maybe I'll figure it out. What do you guys think about this? Back of price clears trouble. Everything says down. Jump in, jump out, get out. That's number 2. That's 2 trades today. Over $1,000 in profit. 2 trades with momentum. 2 trades with a clear path. Over $1,000 in profit. Ron C., you are the bar that people need to aspire to. Get in with all of the advantages. Get paid. Get the hell out. Wait for the next best trade. Oh, right on. Yeah, show it, Morgan. We all have that trade. Some of us have 50 of them. And then here it is again. Strong momentum, 50-50, perfect entry, get paid. And guys, I can't make this up. And there's a reason that 5 or 6 different people in 5 or 6 different time frames, different parts of the world, different walks of life, are all taking the exact same trade. It's because it works. And if you can't take this trade yet, force me to work with you every day by showing me your charts so that we can get you to where you can. And Clara says, I'm a little late. Momentum is slowing. The path is clear. Everything is red. It pulls right to resistance. And you're trying to be more confident about using limit orders. And Clara, that's fair. It's fair. It's scary, right? To sell the market when it's going up. Does anyone else have that? Anyone else like, oh my gosh, it's terrifying to sell on the way up? I want a little confirmation. And guys, that's okay. And you won't require that confirmation in a while. But check it out. One way you can mitigate that, if I need confirmation, I can put a sell stop right at the reversal bar marker. And it'll get me in faster and I won't have to time it out. So if my rule said I needed a reversal bar, if I wanted that confirmation to get in, I just right click below and put a sell stop market. And what this says is that if it comes down and hits my price, well then I'm in that trade. So Clara, just a way to get a little quicker confirmation. And you'll be in right here instead of all the way down there. And great entries create manageable trades. Your risk is established. Good stuff. And eventually, the goal, of course, Clara, is that you get the confidence to sell it on the way up because that's where you get the highest profit. That's where you get the absolute least risk. Nicely done. And then Pete, trig strong, over in the mid band. So Pete, your momentum trade didn't work and you get stopped out high tick. And you get back in on the reversal bar and you add on to your position because everything still says down and you get it all back. And the only thing I could say, Pete, is man, when your momentum style trade doesn't work, take a couple ticks. You're too good at this. You're too good at this to give back $220 per contract, $800. Give back $100 and just re-enter if you want, but you're too good at chart reading to leave that much risk, man. You're always going to find the best trades because you've studied to find the best trades. It does sometimes. All right, who asked me this question? Is this Morgan? You ready for the Sunday school answer? Is this a termination? Did it roll the large triggers? Hell yeah, it's a strong top. It's that simple. Stop adding things. If I don't add them, you don't need to add them. Right? And then you want to talk about a pretty cool pattern? When it's not a strong bottom, when it's just a pivot from the middle of nowhere, this is what John Novak calls unfinished business. When it doesn't reach a key Fibonacci area, guys, it's not guaranteed to finish the move, but when you hit terminations, when the large triggers don't follow and everything rolls, guys, we're not the only people that know about these fibs. And there's this constant fight in the market, buyers and sellers. Your rules are designed to let you take advantage of that. So absolutely it's a strong top because it fits the criteria. 100%. Without question. Great picture, man. Paul knows it. Weak bottom, straight to the termination. Everything goes down. Paul says, man, here I go. And they bumped you out. Butt heads. It's a tight stop, right? But Paul, are you bummed about being up $1,200 today by trading with trend, direction, and momentum? I don't think you would be. I think you'd be silly if you were. And then Ron says, when I reach a mid-band and the large triggers are a full bar away, I'll fight everything to see if the gap theory works. Ron, it's aggressive. It's aggressive. But when you keep knocking these out on 3, 4, 5 lots, it's easy to risk a little bit, right? I'll take a shot at that one. I know exactly where it's likely to go. It's just patterns. Just patterns. That's all it is. And then Miss Clara. Paul. Absolutely, that's the gap theory. Midband is a termination. Odds favorable on the 50-50. You take the entry, you get out of trouble. Beautiful. And then, nice job. You waited for a little confirmation, and you didn't turn it into a home run, right? You're like, I'm in 6 contracts. If I make $100 on each of those contracts, I'm sitting pretty. My life is pretty good. Beautiful trade, Clara. Guys, it's not a coincidence that everybody's taking the same darn trades. It's not a coincidence that when there's momentum and everything says down, that Paul's getting in at a mid-band inside of favorable large triggers. And look at that hold. And some days the market is like an ATM. And Paul, you're killing it today. But the one thing that you'll notice on Paul's trade is every trade that he's taken on the way down is trading with the direction. It's trading with the momentum. It's trading from areas. He's taken those very basic concepts and totally making the market his bitch today. Pardon my French. This was the one, Morgan. So let's see where you're at. 84.25. So right here, you're jumping in on the 50 on a 50-50, right? And it doesn't go. And you're not trading from an area, you're trading in the middle of nowhere. And you get stopped out. And then you take a shot on the 50-50 with divergence from a bad bottom, and you get stopped out. And it's almost, and Morgan, it's cool that you did this. And it's pretty awesome that you did it and you took a second chance because, damn it, you're smart. And the market has to know that that's supposed to work. But what's cool is you're like, all right, I'm all over the place. I need to reassess. I need to go back through. I need to take a deep breath, and I need to get back to the things that are working. And that's exactly what you did, right? And that's pretty cool that you can do that. And that you can do it after losing $1,000 instead of doing it after you lose $35,000. So, man, Morgan, celebrate it. It's cool that you did these, right? Because all it did is it focused you on being better. So always be thankful, guys. Always be thankful for the mistakes. There's lessons to learn from them. Always be thankful for your wife's last boyfriend because he's the one that drove her to you, right? There's always another trade coming. And Andy, this is not loading up for me. There it comes. Everything says down. You bought the mid-band in a strong trending market and it worked out beautifully for you. Or maybe drove her back. That's it. Nice, Andy. Andy did it too. Andy's like, I'm done. I made my money. He's like, oh my gosh, it's too easy today. You keep Nexgen secret. Don't do that. I want you to tell all your friends. I want every one of you to come run into this room with somebody under each arm. Why wouldn't you share this with your friends? Why wouldn't you share this with the people? Oh yeah, we don't care about her trading book. Or him. I'm not sure. I'm assuming you're a man. I'm assuming your gender. My words are dangerous. And then Ron, last one for the day. Everything says down. The path is clear. Strong, hateful triggers. Got the devil in them. Easy money. Ron, beautiful. Monday will do just fine for yard work. Grass is not that bad today. Amen. I've got a 2-week reprieve, and I plan on taking full advantage of it. And then Josh, there it is, brother. Everything says down. Sell a mid-band. We got to work on your management plan, though, Josh. You jumped out because you hit your NASDAQ ATM strategy but still won. Who cares? Your ATM doesn't know what market you're trading, right? So, Josh, cool thing. It scared you. It's like Clinton's new military. Come on. I feel safe because you're so far away. So, Josh, no matter what ATM strategy you have on this entry, doesn't your stop go where the market shouldn't? The only thing that 12 ticks do for you, the only thing that 24 ticks do for you, hell, they could be 50 ticks. It doesn't matter. All it does is it gives you time to put the stop where the market shouldn't go. That's all it is. So, guys, don't get hung up on the number. Get hung up on the location. And then just put it in the right spot. Yep. John Novak does it. There's not a lot of things I tell you to follow John Novak on, but that's a good one. Your ATM strategy is only designed to give you reaction time. Well, yeah, if John jumps off a bridge, you should too, because there's probably some cool stuff in the water below. He's a good time finder, like a heat-seeking missile. All right, Dave, 88088. Everything says down, off the termination. You get in at a mid-band inside of triggers, and sure enough, down it goes. Isn't that crazy? So, Dave, 8888. I like this. This is a lot going on, right? And I'm not telling you how to live your life. I never would. I promise you. But did you really need these to take that perfect trade? And this is, I'm doing this not for you, Dave, because I know that you have experience. But guys, if you're brand new, Dave took the exact same trade that most of you took on 2 charts with 4 charts. And it just, I like to say that because even without these 2 charts, he had everything he needed to take that trade. And this is why when I talk about keep it simple initially, everything that you needed to be successful with that trade. And then guys, as you develop your plan, as you learn to read your indicators, I know Dave uses some of these things maybe for a confirmation tool, right? There's odds favorable momentum. It just confirmed that we should be going down. This was a clear path on a really large chart, confirming that it's going down. So what he's doing, and Adriana, if you're in here, he's confirming that this is the right trade. He's confirming that his read is correct and adding a level of confidence through odds favorable momentum. And I love it, guys. Confirmation charts are great when the rules are met on the initial 2 charts. Pretty awesome. First synthetic short trend trade and first link post. Man, you're killing it. Everything says down, the path is clear, and you sell a mid-band inside of triggers. How easy is that, trading book? So I don't see your exit. Where did you exit? Awkward silence, right? Forcing you to type. Because you know I have a reason for asking. Screenshot not complete. No, we missed the exit. What'd you make? 200 bucks? $300, $100, 560, 220. Cool. That's what I was wondering, or more. Who knows? I love it. He's like, I made so much money. I don't even know sometimes. It's all there. It shows up at the end of the day. We're cool. But I want to bring this back up. 50 grand, because on the ES, there's 4 ticks to a point, and each tick is worth $12.50. And on crude oil, each tick is worth $10. Nope, on crude oil it's 10 because there's 10 ticks to a point. Each point is $100 on crude oil. On the S&P, each tick is $12.50. So every point on the S&P is worth $50. So you only need 16 ticks on the S&P to hit that $200 goal. But if that's the best you could do every day, that doesn't suck, guys. And that's kind of the point that I'm getting at right now, is that you don't have to make all the money every trade to be a successful trader. Take the best trades. Take the highest probability trades. Take the trades that have been proven to win more than they lose, and let that be what sets the tone for you. And we've watched it today. All of you guys are putting on an absolute clinic with the high probability trend trade, and there's a lot of traders in this room finding success. And if you're looking at your trading today and you're down money and you haven't posted in the room to talk about it, then you're doing yourself a huge disservice. So Paul Flowers, you have no understanding of the Renko chart. John was showing it. It looked helpful. You're not ready to learn it yet. Is there something somewhere we can read about it so you can implement it at some point? Well, Paul, it turns out, my friend, that you are great at the Renko chart, because that's what your normal charts are, Renko. These super smooth bars are Renko bars. And what you're talking about is the market flow chart, the range bar chart. And there's definitely a way, and I'm going to tell you exactly what I told somebody this morning. Whoops, that's not what I wanted. Of course, you guys should go to the trading reviews. And if you haven't left a Trustpilot review for us, guys, you should leave one. Especially as we open up the funding business. That's huge. So if you dig what we're doing, man, go give us one. I can't even begin to express how helpful it is. So market flow volume analysis is right here, Paul. And this is the one thing that I'm telling everybody, because I'm getting a lot of people asking lately. So market flow is a confirmation chart. That's all it is a confirmation chart. When your rules are met for the high probability trend trade, it can offer another level of confirmation. When your rules are met for a strong bottom and an HVA trade, it'll help you define your entry areas. So initially, all you're doing is you're using it as confirmation. So one of the things, whoops, and I just blew out NinjaTrader. It had to happen, right at break time. So one of the things that I tell people, Paul, is do your normal trading, do your thing, just follow your plan, but take a range chart and get rid of every indicator except the trigger lines, and use it to confirm momentum initially. So every time you look for a high probability trend trade, make sure that your range chart has that same momentum, that same odds favorable, and go ahead and build the habit of forcing it to be a confirmation chart. And then what'll happen is you'll be so focused on your two charts, and that you'll begin to recognize patterns that present themselves on the range chart. You'll start noticing bar patterns. You'll start noticing when the momentum dies on that range chart, that it's taking away a little bit of an advantage for the likelihood of success. So let it confirm momentum in the beginning. Let your whole goal be around seeing that odds favorable momentum. And I think Dave 888 showed us a great example of that on his chart, where he took a beautiful trend trade, right? So Paul, you're taking this trade based on two charts. And if you come to the range chart, you'll notice that he had odds favorable momentum here as well, which is just like a little more feel good. Just makes you think to yourself, hell yeah, that's a pretty good one. And then this one, where the trend trade would have failed if you tried it, the momentum turns against you and you have to be a little patient and wait for it to go back down. So I love using it as a confirmation chart, and I think Dave used it perfectly. But Dave is very comfortable in his rules on the 2 that it actually just gives him one more level of giddy up to feel good about it. So that's my suggestion, is let it confirm momentum first, and then once you use it to confirm momentum, you'll begin to recognize a lot of other patterns. You'll begin to recognize some bar patterns. You'll be able to recognize some termination conditions. And then, of course, guys, I always encourage you, as you try to learn more, as you try to expand, make sure that you're coming back to class. Make sure that you're posting in the room. Make sure that you're taking the time to get that feedback. Because you don't have to be new to be in this room. You don't have to be a high probability trend trader to be in this room. All you have to do is present a chart. All you have to do is post a chart and say, hey, Mark, this is what I'm working on. This is what I see. Do you see anything to help me do it better? And guys, I get giddy when I get to help you guys with the plans outside of the main plan, the basic plan. It's fun for me. It's so much fun for me. I've had the very fortunate time working with my brother on TradingView and going through and recognizing patterns on TradingView, and we're building trading plans outside of NinjaTrader for when the funding company comes in. And man, it's exciting to me to go through that and do that. So, and then Paul, here's the other question though, is if you have the wherewithal, if you have the ability to make money consistently and get funded, why would you change what you're doing? If you have a plan that you can make money with every day, why would you change that plan? Andy, I don't believe so. I don't believe TradingView will have the fibs, but the browser version will be 100%. It's pretty cool. And then John says yes, and that's why you guys shouldn't ask me technical questions. Because John knows the answers. But you'll have the browser version, guys. You're not going to need it unless you just want it. It's pretty crazy, isn't it, Paul? And it's awesome to see John Novak in the room. And a lot of people have trouble following him because he's really smart. But what happens is once you're pretty good at chart reading, you'd be amazed at how clear what he points out is, guys. And I'm telling you, we talk every morning. Every morning, he and I go back and forth. And if you look at our gallery, every morning, chart after chart after chart after chart after chart, guys. And we talk every morning, and we recognize patterns every morning, and we work on trading plans every morning. And we're in this constant state of learning, and you guys are getting the benefit of everything that he teaches me every day, which is pretty cool. We tell each other how great we are all day, every day. We do. You have to have supportive siblings, guys. I'm going to take 5 minutes and take a quick break and go reload my water. His favorite saying, well, you know what it used to be, Paul? He used to say it's obvious. That used to be the 2 words that pissed me off more than any other words he ever said. Well, guys, it's obvious that this is what you should be doing, and it's obvious that you should be doing this. But the reality is, guys, I couldn't read indicators. Nothing that he found obvious was obvious. So when I started teaching these classes, I come at them from a point where absolutely nothing is obvious. And we create through repetition, and we create through recognition, and we create through pictures and study and all that sort of stuff, guys. What wasn't obvious at all ever suddenly becomes obvious because you made it obvious. You forced it to become obvious through your study, through your picture taking, through your feedback. Amen, Rob. What's a camshaft? So, guys, focus on the basics. And Rob, you showed up a little late. I know you had to sleep in today. Read this when you get a chance. And guys, if you want to reread it, go right ahead. But that right there is why I teach the way I teach. And I made a document on it, so check it out and read it. And John says 55:11 is a key spot on the ES to make a stand. I don't have the ES, so John's going to post a picture for you guys. I'm going to go take 5 minutes. When I come back, we're going to finish strong. We've made it through every picture posted, which means that you guys have a blank slate. Tell me what you want to talk about today. Back in a second. All right, guys, let's go through it. John Novak, creating bad habits. Guys, I can't stress enough, my brother is brilliant. His trading plan will empty your account instantly because you don't understand what he does. I know because I learned from him and I tried to do what he did without knowing what he did. But let's go through and do the chart read, guys. So, and guys, and this is such a key thing. And I want to go through this because eventually you're going to change, right? So, let's go through it. Is there odds favorable momentum? What do you guys think? Strong triggers as the market reaches this key area. Anything can happen. Absolutely, Rob. So when anything can happen, weak triggers reach an area, the area is more likely to hold. Does that make sense, everybody? We're void of momentum, and there's a giant blue line that may stop the market. So this is his first read. He's not saying, how do I get through this blue line? He's saying, man, if this blue line holds, I'm not to read number 2, John, just commentate. If this blue line does in fact hold, pretty cool. But this is his first read. This is why he's saying, man, this is an area with the potential to be a bottom. And then you go to his next read, and he says, well, 1 loss of momentum, 2 losses of momentum, there's another loss of momentum, and when it comes back and retests, there's weak triggers. Man, it's 32 inches wide, trading book. If it's small on your screen, yeah, what Andy says. So click on the picture, and it'll blow it up. So do you guys notice how his second picture, not only is the area still holding, but now he's getting divergences, large triggers are rolling, there's no strength against it. And he says, you know what? I'll take a shot. My risk is minimal. If it holds, it's good. And he's not shooting for a home run. He's like, I'm going to get half off at the first trouble, and then we'll look for the rest. And location of the triggers is huge, guys. It never breaks the area, large chart or small chart. And he got his first target, and he has absolutely no risk because he's still counter trend trade. And if divergence prints 3 in the same location, he'll exit. But you guys see how everything is a chart read here? Everything is a chart read. He's reading his indicators, starting with the large chart, and then he's looking for opportunities that can be low risk on the small chart, and he's not greedy because he knows it's not high probability. And man, great chart reads. John Novak, great chart reads. Third divergence prints, takes out the previous low. And he says now, with the close on the right side of everything, we'll give it 1 shot because now it's just getting better on the large chart. And we'll see what happens. And guys, this is the stuff where I'm going to tell you right now, you guys are going to want to do what John Novak does. You guys are going to want to trade like John Novak trades. You guys are going to want to be able to do all this stuff that you see him doing because you see him winning. And until you can read charts super fast, you're going to make mistakes on these and you're going to get run over about 1,000 times. And he put it in there. Don't do what he does until you have 50,000 reps, just like he does. And then, Pete, can I talk about the small triggers on the 5-1 when price reaches an area inside of large triggers? So, Pete, there's a pretty good gap in the information on what you're telling me there. So, let's talk about a couple scenarios. If I have odds favorable momentum and a clear path, Pete, I couldn't care less. So if I have, and let me pull up a picture and that'll be easier. Nice trading, John. See, but you can't look for an entry without the large chart, right? And I think that this is the challenge. Are we assuming that the rules are met on the large chart? Is that the assumption? Okay, so we're assuming that there's odds favorable momentum, and we're assuming that there's a clear path on the large chart. I like that, because then I know what I'm getting into, right? So in a perfect world, Pete, odds favorable momentum on the small chart is your absolute best case scenario. But here's the deal, is that my large chart is 100% awesome. There's things that don't faze me. Divergence doesn't faze me. Small triggers turning against me doesn't faze me, because the large chart's leading the way. And sometimes, even if those small triggers start to work inside, it doesn't faze me, because the large chart is still leading the way. I'm letting the large chart define the momentum. I'm letting the large chart define whether or not there's areas that are problematic. So inside of this one bar, the one thing that you'll notice a lot is that the odds favorable momentum never changes. The path never changes despite all of these fluctuations. And at one point, the smalls even came back to the large. And it's this loss of momentum. It's this loss of momentum that gets us back to the best entry. So in a high probability trend trade, Pete, I don't panic very much. But let's go into a different scenario. What if it's only a 50-50? Right? What if you've already sacrificed that clear path? Doesn't it make sense if you don't have the clear path? Doesn't it make sense to insist on odds favorable momentum for your entry? So if my path isn't clear, well then I'm going to insist on odds favorable momentum. If my path is clear, I might be willing to give up a little bit. What market are we talking about? Because then that has something to do with it too, Pete. No. There's no looks on the small triggers that worry me on either of those. Nope. One thing that may happen is if it's coming from a divergence right at a fib or divergence right off of one-to-ones, I might wait for confirmation. Small trigs still below all large and synth. What do you mean doesn't trend trade? Doesn't affect the trend trade, right, John? Doesn't have any bearing on the decision-making process. Doesn't change the trend. Yep. Amen. So yeah, Pete, there's really not. And usually when people ask me these questions, they're fudging a rule on this side, thinking that it was something on the small chart that messed up their good time, but usually they're trading into a termination or fighting something on a large chart, maybe not with the momentum. And I'm not saying that's what you're doing, but that's what I did. So yeah, no reason. Jeffrey Dean. You saw a termination and went for it? Okay. Oh, it worked. That's a tough trade. That's a tough trading plan, though, isn't it? Because you had a termination here and didn't go short, and you had a termination here but didn't go long, and you had a termination here but didn't go long. But that's cool. That's not a trading plan. That's an oh shit, I hope it works, right? So go in and talk about. But you didn't even talk about you talked about a termination. That says no more short trades, right? Nothing says go long yet. And that's kind of the point I'm making. I'm glad it worked. I think that's wonderful that it worked. But how many times is this going to lose? But what if you said, but remember we're making this repeatable, right? We're creating a recipe. What if you said no triggers through termination? I know what Pete's thinking right now. And then you get 2 divergences and the large triggers roll, right? So the idea, Jeffrey, is that you start piecing together what it is that you see and why you're willing to do it. Because this may be the greatest trade ever for quick profits. How are you going to repeat it if the only thing that you have written is I saw a termination condition? Yeah. So I don't know what that means on set limits. I'm not sure what you mean by that's what you're trying to do on set limits. John, stop flooding my room with pictures that I can't see. When you say trying to do on set limits, help me out with that. Ooh, you're anticipating the market. All right. All right. Well, you don't have to anticipate. That's the beauty of it. Anticipation doesn't create an advantage. Patterns that repeat themselves are what create the advantage, right? So anticipation is tough. Just go through, write down everything that you saw, but there had to be more than just a termination condition. Otherwise, we're missing 7 trades up here. So what did you see? Even if it's not right, even if it's not a reason for a trade, start typing in what you see, what you think, why you were willing to take that trade, and you'll be floored at how you create a trading plan. All right, Andrew Z. 2 losses, 1 win. It's okay for 3 at once. So 50-50 trade. It's a strong top because it's a termination that reversed the market. 50-50 look. So here's the question, Andrew Z. Why are you in at 40.25 and not 43? Why are you in at the bottom of the move? You waited for a reversal bar and it was 5 bars later. Learning how to use those stop orders will help. Here, I created a little 1-page deal on it. Let me find it real quick. There's a little something to help you use stop orders where you actually have it on the reversal bar marker. And then once you get 2 divergences on a 50-50, Andrew, that's a great reason to get the hell out of the trade. You're welcome. So you got to know why you're getting in. You got to know why you're getting out, what it's going to take to get you out. You got to understand what kind of trade it is to do that. And then this one was just perfect. Odds favorable, nothing in the way. And you're still waiting for confirmation because of the split triggers. No worries. Beautiful trade, Andrew. Really nice trade all the way down. And then a cool lesson. So when price reaches a mid-band and your large triggers are a full bar away, it just means no long trades. It means don't try to go long yet. The mid-band is your termination condition. So there was no clear path. And that's the gap theory. And the mid-band, is a termination condition if the large triggers are a full bar away. Where the heck is my internet? Here. So I'm going to go in and I'm going to take a picture of this, or go to the rules real quick. Straight from the trading guide. And this is the only time that the mid-band is going to be that termination condition, is if the large triggers are a full bar away. We call that the gap theory, Andrew. So when price accelerates away from those large triggers and smacks into a mid band, if the large triggers are below the reversal bar marker, it just means no long trades. It keeps you from taking a shot on that one. And your trigger lines are wonky. You need to reload a little historical data on that one. But great trading, dude. And that's a great look with the exception of the gap theory. So you ended up trading into that termination condition. John, termination condition holds, second lower divergence, odds favorable, pull back to the large right at the mid band. Absolutely. Guys, this is solid. What John Novak did here, termination, triggers roll, second divergence. Check this out. He used to teach this trade in 2004. Where you hit the fibs and sell a pullback to the small triggers. And that's exactly what he did here. And your pullback to the small triggers looks like the pullback to the large with an area. This is an outstanding trade. Once again, taking advantage of termination conditions. Taking advantage of those areas that are stopping the market. And then getting paid at blue lines. And we got that one, John. It's back and forth. Some days it'll let me get them, and some days it won't let me touch them. And it's the weirdest thing ever. All right, Andy. Bad bottom. Odds favorable. Midband is not behaving as a termination condition. The challenge, Andy, is that this was your entry. And you had so much room to manage it. So much room to manage it. But because you got in on the second divergence, still a great entry, it tightened it up a little bit. And then third divergence took you out. Great management. But getting in on the first trade, the best trade, makes life a little easier. Nicely done, Andy. That's a good looking day on there. Over 1,200. I love it. And I'll do a full clean out on my Chrome this afternoon and see if that's helpful. Caught in between fibs, right? Torn between two levers, feeling like a fool. No short trades, no long trades. Just got to relax for a minute. Let it sort itself out. What do you guys want to talk about? I think we clicked on all of them. You need to up your stakes eventually on live? Right on. All right, guys, what do you want to talk about? What can we talk about to make your life a little better? And John has switched to the ES versus the NASDAQ this week due to the nice volatility. Yeah, I have too. ES has been really well behaved this weekend. NASDAQ's been a little nuts, guys. It's a volatile market. There's a reason that I pull up crude oil. There's a reason that I pull up the S&P in here. It's just smoother. All right, so here we go. Termination. Odds favorable. Potential to break. Sorry, Pete. The neighbor's mowing the lawn out there. If I get a reversal bar, that yellow box represents the point where the market just got in. Oh no, Cindy, I see you just get in. I've already written a strongly worded email to you. We're going to talk about punctuality. This whole having a life outside of my classroom, it's got to stop. You're fine. You're a mommy trader? What a wonderful thing. It is hard. It definitely is. That's all right. They grow up and leave at some point. They never take their hands out of your wallet, but they at least call you for the money instead of walk up to you for the money. So how we doing, guys? There you go. Put them to work for you. Whoops. Just read that hostile review on Trustpilot from a few days ago. He said you have his address. Can I send them an anonymous glitter card? No, Morgan. What's your question? Trading, I don't use the copiers, but my brother's in here and he knows all about them. Trading, I believe that you have to be licensed by the CFTC. Otherwise, you get hundreds of thousands of dollars in fines. If I'm not mistaken. Yeah, filters don't always work in the Novak world. There you go, trading book. I knew John Novak would know the answer. 50-50 trade with divergence, ladies and gentlemen. It doesn't change where the market is most likely to continue, but it decreases the likelihood of success a little bit. And John says, with that bottom, be willing to lose. And that's, I don't disagree with John Novak on this one. Strong tops and bottoms make a difference, guys. You got strong triggers, strong bottom. And again, trading, I'm going to let John Novak answer these. My expertise comes in teaching people to read indicators. The brokerage side, the copier side, the technical side, it's all Greek to me. Now, if you want a tattoo of somebody trading futures or something, I can do that. But I'm not sure what the answer is to that one, I'm afraid. There you go. John just gave you a link. It's an old link. There you go. And guys, there you go, 50-50 from a strong bottom. Morgan, he never got software. He wanted free software. Show me a picture, trading book. think so, Morgan. All right, now we're 2 divergences on a 50-50. Fair enough, trading book. Yeah, I agree, John. We're pretty good at upsetting people. So what are your goals trading? 100 and 200, like the KISS plan? If it's 100 and 200, 8 and 16 on the ES. 10 and 20 on crude oil. And yeah, Novak men are built without brain to mouth filters. It's 100% true. Even when we're talking to each other, which is fun. You can do whatever you want, man. Trading book, I've never in my life told anybody how to trade. You can do whatever you want. You can change it up all you want. And then, John, my rules say two divergences on a 50-50 just sucks. That's what mine says. Christine, yeah. I've known you for half your life. I haven't seen your filter yet. But you don't even have to worry about them, right, John? 2 divergences on a 50-50. It's likely to push lower. Likely to push lower. Next time we're in Florida, Christine, we'll have to all get together. Andy, everything says down. Sell the mid-band. Get paid. You'll be 55 next month, Jeffrey? Heck yeah. I'm 52. I'm an old 52, though. I'm about 152 on the inside. The cool kid club. I keep trying to talk John into it, Morgan. I think we should all get together and play golf. Have the Nexgen scramble. I've already picked my ringer from the client list, so. Not in Miami, Cindy. You still drive hot rods? Amen, Jeffrey. I can't get in and out of them. It's fun to put faces to names. It really is. Listen to Hair Nation. I like it. That's true. The food in Miami. All right, let's see what we did at Trading Book. Everything says down, and you sell a pullback to areas inside of favorable large triggers and make a bunch of money? Is there anyone that doesn't understand this recipe? Everything says down with momentum, sell a pullback in an area inside of triggers and make a lot of money. And then John says, and hold on. So in the beginning, you might just get paid, right? So Trading Book, with everything screaming down, no reason to take an exit, right? That's how trading plans come into play. Get paid and let the second one run. Go break even. Get used to winning first, and then management will come into play. You'll start recognizing patterns, and the more time you spend with Fibonacci, the more likely you are to hold your trades. And John said, there's your first line right there. That's a big difference, right? Did that one divergence do anything to that odds favorable momentum and clear path? Not at all, right? Momentum is working. So trading book, do you remember? How does divergence come into play on the small chart initially? Takes 3, right? John, I'm going to boot you out of the room. 3 divergences in the same price range might kill our good time, but man, when you're odds favorable and clear path, these are where you start to learn to hold on for bigger moves. These are where you learn to trust for bigger moves. And that's exactly what it is. After you know it and see it, it does become obvious. It really does. But nobody in this room is expected to have anything obvious other than that it works. You just have to learn to work it. Or a divergence at fibs. But if you hit fibs, trading book, isn't that getting to a line? Oh. And lines are a great place to get paid. And this is one of the great things about what we do, guys, is everybody in this room will be able to catch these trades. Everyone in this room will be able to call these great entries. Everyone in this room will be able to exit a trade with 100% confidence that there will be another trade. And that's the cool thing about what we do, guys, is you're going to start to believe that it's not one trade a day, that you're going to find a lot of opportunities to make money, that you're going to recognize a lot of advantages. And when all that holds and there's odds favorable into it, it may be time to go the other direction. Pretty cool, right? That's a pretty good day, trading book. And that's why you have a green check next to your name. Because you believe in it, you're just learning to make it right now. You're just learning to make it right now. You're learning how to trust it. You're learning the looks. You're learning the repetition. And I got to tell you, I'm absolutely stoked that you're getting the feedback. Because my favorite thing to do is to help you guys do it better. And the only way I get to do that is if you post a picture. I like it. And that's a great place to do it, man. Get in on management and do it, right? Let it go to fibs. Let one go to fibs. Get paid on one, go break even, and just let the other one run. And then John waited for the down move, and everything says down. So trade 2 contracts. So in your ATM strategies, go 2 lot, 12 stop, 20-30 target. And then if you get into the market, you can have one where you just get paid, right? And then you can have one that goes the distance. Pretty awesome. So get paid and then let that second contract run and start to learn to trust it. Yeah. And then you can move, you can click them and you can move them anywhere. So that right there is $100 on a 50-50 trade without divergence that pulled up. And you're absolutely right. Trading 2, watch this. If I do this, I just made $60 and I've got $40 risk. So no matter what happens, I can't lose money on this trade, which makes it easier for me to hold for the next line. That's the whole idea of getting paid at 100 and going break even. That's designed to develop trust. Because if you're getting in because of the momentum, right? And obviously this is a 50-50. But if you're getting in because of the momentum, if you're getting in because of a clear path, eventually you're going to learn to trust it. So when you go to the client trades too, there's some ideas here. When to hold. And this says when the 13-2 triggers are strong, there's nothing in the way, the odds are favorable to reach the next fib. And if you go through the spreadsheet, there's a few of those, right? Hold for bigger moves. This is one that I took. Odds favorable, clear path. There's my entry. And it hit the next target. but I got paid before too, so it's easier for me to hold for that large target. It's easier for me to not worry about fluctuations because hell, I've already got $400 in the bank on the trade, and absolutely nothing bad can happen to me. So simulator's great for that. Multiple contracts are great, and when you can't lose, it's easier to hold. It really is, and you're absolutely right, man. Market replay is a great way to develop that trust. Market replay is a great way to do it because you can't lose on market replay, right? I can't lose on this trade. I don't care what happens. And every market's going to have its own little temperament trading book. Gold tends to run over areas a little bit. The NASDAQ is crazy volatile. Crude oil and the S&P tend to be the smoothest of the two. And that's why we pull up crude charts, and that's why, we talk about the S&P so much when we do this. Crazy, either dead or jumping. Yeah. But the cool thing is it doesn't matter what market you're trading. It doesn't matter what direction that market's going. If you're following rules, if you have a plan for entry and a plan for exit, your plan doesn't know what market you're trading, right? You've just got rules. 3 divergences, holding for the super fib. 3 divergences is a deal breaker. So he has to exit. You don't even need any patterns. You just need the same pattern 2 or 3 times a day. That's it. But the whole key is just having a foundation, right? I'm going to give you guys one more thing here. Understanding exactly why you'll enter the market. Understanding exactly why you'll exit the market. And once you have those 2 things figured out, you just commit to having the rules met. And it takes all the stress. Takes all the stress off. All right, Cheetah. Why? Why did you go long with everything down? Why did you go long against triggers? Why did you go long with every indicator on every chart down? I don't know. You didn't write any rules for it. Why did you do it? That's awesome. Shaggin' wagon. And I know it's fun to do what John Novak does. Okay, so what's the direction? What do you suppose? Down. Large triggers down, small triggers down, large triggers down, synthetics down, small triggers down. Everything on God's green earth says down. Okay. Good luck. I don't know what to tell you. Because this is an educational classroom, I'm obligated to tell you that you're fighting everything. I don't know where you entered. I know what price you entered. It's not a momentum trade. It's not a trend trade. It is a counter trend trade, 100%. At least you let it hit the line first, so I like that. But man, it's a high-risk trade. It's a low probability trade. One of the great things, and John just kind of said it, is that if it's really going to work, these things are going to start to roll over here. But this is why I ask you to annotate charts, guys. Because Cheetah, what if this is the greatest trade ever? How are you going to repeat it? Same thing I told Jeffrey. If it's the greatest trade ever, how are you going to repeat it? How are you going to know what it was that got you in? How are you going to know what you should have been excited about? So that's kind of why we do it in the classroom, guys, and why I always go back to advantages. Especially if you're not at a point where you're making money consistently every day. Do you need to be the first person in? Right? Do you need a counter trend trade to be successful with the software? I don't think so. And I won't tell you guys how to trade, but I want you guys to stick around. Once you break the super look, no counters until things roll. I know, right? That Winnebago is cool. I was just looking at it on the side. And you know what? In the beginning, Jeffrey, it's all about just posting it, right? But the most important thing that you guys can do is tell me why. Tell me why you went long. Tell me why you went short. Talk about what you see on your charts. Cindy, you had a weak top. You had odds favorable, 50-50, divergence. You get in at the area and it didn't work, right? It just didn't work. It's a great look, but you had two things against you. You had a weak top against you, and you had divergence against you. So you're starting to give up your advantages a little bit on that one. I don't mind a divergence on a 50-50 if it's coming from a strong top or bottom. If it's coming from a weak top or bottom, I'm not a huge fan. I find that it goes away, that the advantage goes away. Pete, 50-50 trade, pulls right back to resistance inside the triggers. Absolutely no divergence. And it's all going down. And then it just depends on what happens next, I suppose. So there's divergence. Does it change the thought process? Then John, bad bottom, into the mid band, no divergence, waits for the up bar, looking to hit the fib. And John knows that that's a good spot for a bounce from a bad bottom in what's been a downtrending market. They may be trying to get to 54.82. And he's out at the first line. And he's got absolutely no risk on the trade. Understanding how to manage is a big part of what we do, guys. So, good stuff. Great job, everybody. Thank you for posting. Thanks for doing all the stuff you did today. That is it. We made it.